Investments in securities market are subject to market risks. Read all the related documents carefully before investing.
Is the risk reward changing? For the past 2 years, one thing was very common in multiple teams of the market. Higher risk gave you higher reward. So those who even invested on teams which are based on very distant future events made money in the present. For example, somebody who invested in a company entering semiconductors made money just with the announcement of a factory. Somebody who is investing in a company that is going to make components for electric vehicles made money because the company said that it may get an order from Tesla. So there was a lot of excitement that led to people making easier returns. So people were willing to take higher risk. The highest returns in the stock market came from SME stocks. In fact, the multiple of SME stocks was higher than even mid-cap stocks. All this shows that people were taking higher risks and that was being rewarded. And how? Very generously. But whenever you see this happen, you also know that a day of reckoning is around the corner. When that day of reckoning happens, suddenly this magic formula will stop working. I believe that we are very close to that day of reckoning. In fact, it could be behind also. So the day could have almost passed in the recent weeks. We don't know that. We'll know that much later. But it's important for us to be aware and very self-aware. What is the difference between the two? Be conscious of what valuations your portfolio currently is trading at. What is the valuation of your portfolio stocks? Is it high? Is it bearable or is it low? Or is it very attractive? So you need to be aware of this because that is what will give you a sense of direction as to whether you need to sell anything in your portfolio. Also, you need to be self-aware. Why are you investing? What purpose are you investing for? When do you need returns? How long can you wait? What is your risk appetite? Is your current investing aligned to your risk appetite? What is the change in the scenario around you? If you're investing in India, what has changed in the last few weeks? And what can change further? All this should be something that you're very self-aware. You can't expect others to make you aware. You must realize all these things so that when you look at a prospective investment, you are able to assess whether it's the right thing for you. Even assume that an advisor is telling you, please look at this investment. You should be able to perceptibly say that I don't think I'm going to do this because it doesn't suit me, or yes, this suits me and therefore I would do it. Investors need to realize that this market is going to turn a lot and it's going to turn very fast. And the rate at which it changes will not be very comfortable to the market, mainly to the market participants. So you can see days which are very bright with the rising market, and you can see that being followed immediately by days which are very gloomy. We saw some in the week that just ended, and I believe that this is just the beginning of an extended phase of market mood swings. So I think the era of secular rise is over and you are going to see a seesaw market or a yo-yo market. So make the most out of it, prepare yourself, be very selective. Don't be looking at the immediate past and trying to do in the present everything that worked in the last 1 or 2 years, because probably they may not work in the coming years, or They may take a very long time to work out. So don't waste your precious time based on your recency biases, and try and think beyond the immediate, because if the markets don't perform for a few years, you should be owning what will perform after that phase. So it's a very, very interesting time. It's a very, very exciting time, but it is also a very, very sobering time for equity investing. Thank you for watching this video.